This episode is brought to you by the Moo Investing app. Use the link pinned to the top comment so that you can get with us and trade like a pro over there, baby. Now, let's talk about it. This is technical analysis, lesson 3. At the time of this recording, you should have already taken lesson 2, lesson 1 first, 2 second. Let's get to it. We talked about MACD and RSI, but now it's time for the official lesson. So we have this. MACD is what we'll start with first. This is how it looks. If it looks confusing to you, take your time. You can watch this again, but you're going to understand it by the time we're done. Now, this is the MACD indicator window. I want you to notice just 4 things. We're going to take it very slow. We have 2 lines, and then we have a histogram on the bottom, right? You see these bars on the bottom? Bars on the top and bottom. So 4 lines or 2 lines, and then bars on the top, and then bars on the bottom. That's all I need you to see. We have a white line, a red line, a bluish, light bluish type bars, and then a darker blue bars to go with it. Now, let's get into the definition of some of these things. Now, MACD, what does that mean? Moving average, convergence, divergence, aka MACD. It's an acronym. Now, it's a momentum indicator that shows the relationship between 2 moving averages. Those moving averages, those are just those lines again. So these lines that are moving are just moving averages. It follows the chart, right? So let's go back. It says that there's the 9 EMA. It's called the signal line. I need you to remember that. The signal line. And then we have the MACD line, which is calculated by subtracting 26 EMA from the 12 EMA. You don't have to get down to the nitty gritty, but this is how it works for those of you who want to understand the whole thing thoroughly. Now, just remember this, if nothing else. There are 2 lines. What you're looking for is how are they crossing each other? When they cross down, the MACD line crosses down, that's bearish, meaning you can buy puts potentially, or you can basically get out of the things that you were going long on. If you see the MACD cross up, this is the white line, this is bullish, meaning, oh, we got some positive momentum. So it's an indicator of strength or weakness, right? So if you see the MACD line, this white line, cross up, that means that we're going up. But if you see it crossing down, it means we're coming down. And again, technical analysis is never 100%, but these are the indicators that show you strength or weakness. Now, let's keep it going. We got the definition out of the way. Let's see how it works. So this indicator works with 3 major components. Again, those 2 lines, the MACD line and then the signal line, and then that histogram on the bottom. Those are those bars going up or bars coming down. Now, the main line is the MACD line. That was the white one. You're trying to see, is it going up or is it going down to tell you if it's showing strength or if it's showing weakness. The other one, kind of like a baseline, this is our signal line, right? And I'll just show you that again. So our MACD line, our white line, is our main line. You look at it right here. You say, is it going up above this red line? No, it's coming down, which means a lot of sellers are rushing in. And then look at it over here. You see the white MACD line? You see it going up. It's crossing that red signal line. Oh, yeah. This means a lot of buyers are coming in. So this is positive momentum, and then it ended off with negative momentum. Let's look at an example together. So when you look at the charts, you'll see, okay, yeah, it's going. But you don't know, should I get into a call? Should I get into a put? Imagine that you're on the 5-minute time frame because you're trying to trade, get in, get up, get out, same day, right? And you can do this on multiple different time frames, but check this out. You see the stocks going up. You're wondering, should I buy a call option right now? What's going on? Go and look at the MACD. You see that the MACD white line crossed under, but we're here. It looks like it's going to continue up. Is it going to keep going up? At this point, the MACD told you, no, it's going to come down soon. So then when the MACD crossed down, you would tell yourself, yeah, I'm going to trade with the chart, not with my heart. This is not the time to get into a call on this particular trade. You have to exercise patience. So then, just like the MACD told you, when it crossed down, look at the stocks. The momentum was down. So then you wait. Or you could have gotten into a put and rolled the wave down. But you wait, and then you see it cross up. You see the MACD right here start to cross up. And then look, you enter your call and you ride this wave. And then you're wondering, when should you get out? You know what? Look, the MACD is coming back down. Coming down, and look, it's going down. So now that's how you use the MACD. You use it for your entries on your trades. So let's look at another example again. Now let's look at this. It says bullish crossover right here. Let's say you've seen all this negative pressure coming down, and you're wondering, when is this going to stop? The MACD is telling you, oh, look, MACD, white line crossed above that red signal line, that means that we should get a little short-term pump, which means you could ride this little wave. You don't want to ride it forever, but you could ride it on a specific small time frame. Like if you're looking at the 5-minute time frame, then you could ride this for increments of 5 minutes. I'm talking 5, 10, 15, 20, something like that. And then you ride the wave until the MACD tells you to get out. Now you see the MACD starting to curl back down. This is the first signal that you should get out. But when it crosses, this is a definite signal that you would get out. So how you would play this is, for example, you see this MACD cross up. You get into a call, you ride the wave, ride the wave, ride the wave. You're wondering, when is this wave going to be over in the short term? Then at that point, you see it all the way up here. You wouldn't know this was a peak, but the MACD is starting to curl down. So this is your first indication that this is a peak. So then it crosses for sure, like about right here. So you would enter a call right here, and then you might not get out at the top. You could if you're doing it and playing it on the curl, like it's going to curl down. But then look at this. The MACD crossed about right here. You would let go, and you would have got in here on a call and got out up here and made a lot of money on that. Now, the histogram is kind of telling you the same thing. The histogram are the bars on the bottom, right? You could just use the lines if you so choose, but you could use the bars on the bottom as well. And look at them. When you see it going up, so this is a zero line that separates these bars up here and these bars down here. So now, look at this. You see it going up, 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 up. So this means that the buyers are rushing in, rushing in, rushing in. And this is like peak buyers. And then the buyers start to slow down. And when you see the buyers slowing down, you know that, you know what, we're losing momentum. And then we head down into the underside of the zero line. And you see that the sellers are now there and they're dominating. But then this oscillates, it goes up and down and shows that strength or the weakness. So now let's get over to the other side of this, which is called the RSI. RSI is the relative strength index, which shows you if it's overbought or oversold. Overbought means there's way too many buyers way too quickly. There's no way they could keep this momentum going. This is another sign of strength or weakness. Or oversold. There are way too many people selling it way too quickly, and there's no way that the selling is going to keep at this level, right? Or generally. So now let's go to the definition. RSI stands for relative strength index. So we're trying to see strength or weakness. It's a momentum indicator like the MACD, but different. You use these two together and they really are a banger. So it says it measures how overbought or oversold something is. Okay, how does it work? So it goes from 0 to 100, but the real range is the overbought range is between 70 and 100. So if you ever see a stock and you look at the RSI and the RSI is like 70, you already know this thing is overbought. There's way too many buyers here all at once, right? There's no way we're going to be able to maintain this long term, these amounts of buyers. Now, if it gets up closer to 100, you know it's way. Getting to 70 is too much. Getting way above 70 for most stocks, all the way close to 100, I'm talking 90, 80 up there, you know it's way oversold or overbought in this case. Or on the opposite end, when we're oversold, when we get to 30, like 29, we're oversold, family. Straight up, oversold. Now, when it gets to 20, I'm talking 10, I'm talking like you've seen it at 5. You know this thing is pulling back like a rubber band where it can't sell off like this for too long on this time frame. The selling will have to cool off a little bit so the RSI will get into the normal range, which is in between the 70 or between the 30. So the closer it is to 70, the closer it is to oversold. I'm talking like if it's 65, 67, something like that, right? It's getting closer and closer to oversold. So then the closer it is to 30, the closer it is, I'm sorry, I'm saying that backwards. The closer it is to 70, the closer it is to overbought. But the closer it is to 30, the closer it is to oversold. Again, take a screenshot of this if you need to. But this right here is an excellent chart. Super simple to see. So now let's see an example. So we got the RSI right here. This is our stock price moving up, moving up, moving up. Notice you're trying to wonder, or you're thinking to yourself, is this thing going to keep pumping, right? Should I get into a call right now? And then you look at the RSI. Look at this. RSI right here is over 30. I'm sorry, it's over 70. The 70 is here. You can't see it because my head is in the way. Let me move myself on my screen. You can't see it too well. Let me move myself right here. Okay. So look over here. You see the 70 on the RSI. You see the 30. 70 means it's over it's overbought. 30 means it's oversold. So too many buyers right here at this 70. So if I said it backwards, 70 means it's overbought. 30 means it's oversold. It got over the 70. It's not going to be able to maintain this level for too long. So in this case, you can imagine it's going to come down in the near future, midterm to short term. So look at the stock. It's going up. It got to oversold or overbought right here, too many buyers, but it kept pumping up, right? But notice the RSI has a slope. We have a high, we have a lower high, and then we have a lower high. So you can see the MAC or the RSI in this case is actually shrinking and going down, which means this stock that's pumping up is losing strength because it's all the way up here where too many buyers were, but it's losing strength and the RSI is going to cool way off. And then look, it happened. It cooled way, way, way off. You can see the price of the stock and the RSI diverging from each other, meaning they're going opposite ways. The RSI is coming down and the stock is going up. That means that, guess what? This thing ain't going to pump like this for too long. So whenever you feel like you're buying something and you're like wondering, is it going to slow down soon? You look at the RSI and you say, okay, the RSI is cooling off, which means that this stock is going to cool off too. So, okay, let's go to the next example. You're looking at the chart, right? This is Weeble. You're looking at the chart and you're wondering, how could I play this one, right? So you look at the RSI. You're wondering, could this thing shoot up? Remember, if we get the RSI near this gold line down here, this is 30, this gold line up here, this is 70. If we get the RSI and it's near 30, we know that the sellers are about to dry up soon. They can't keep selling at this rate. So they've been selling. We've been coming down, but then we get to a point where we're near 30. Then this can be an indication of upcoming strength, which means we're near 30. We should slingshot up a little bit. So then boom, let's say you get into a call over here, but you would need a tight stop loss because you don't want it to go under 30 and then just keep dropping, right? So you get into a call, let's say right here, and then it pumps. And then it gets over the 70 line, which you know it can't really maintain that strength. It could go higher, but you see it get over here. So then you get into a call here on the RSI, being at 30, you get out when it's at 70. So it's up there, boom, I'm out. So now what you want to ask yourself is, should I get out of this one or should I keep playing it? You look at the RSI again and you can see we have a high, we have a peak, but then the next one is lower, which means, you know what? The momentum on this play is dying down. It's losing strength. Two indicators. The first indicator that is losing strength is that it's up here in the 70s or near 70. And then the previous peaks are lower. So they're getting lower. So then that's a sign of weakness. And look, on the rest of the day, it basically came down. All right, now let's use these two together. So you have the MACD and RSI together. How do you combine them? So the reason you would combine them is to have added confirmation, right? All of these indicators, they're great. They all work, but they work well together. So you say, I find a play. Like, for example, on the Discord, how we have the MACD bot, right? If you get the MACD alerts, then what you can do to add to the confirmation is say, okay, I got the MACD alert, so I know the MACD crossed up, right? You see this blue line right here? This is my MACD line. My signal line is golden. So my MACD line, boom, it crosses up. The bot on the Discord, it'll send you a notification. So you don't have to wait. It'll send you the notification to tell you. And the bot as well, it doesn't work with the after hours. So there are no extended hours on the bot. If you want to have the same alerts as the bot, what you need to do is turn off extended hours and just have it so it doesn't show aftermarket and pre-market, right? And then you have the same alerts as the bot. So now when the MACD crosses up, boom, you get an alert from the bot. What you go and do is check the RSI. Is the RSI, the MACD crossed up and the RSI is down here near 30? This is a great sign of strength. And look, one confirmation, two confirmations, and then boom, rocket. You're riding a wave all the way up. That's how you would use that and use the MACD and the RSI together. Now, let's go and let's use some pro tips on this, right? If you enter a play based on the MACD and the RSI, you should exit based on the MACD and the RSI as well. So you don't want to go from apples to oranges. You want to stay apples to apples and oranges to oranges, right? So I'll explain exactly what I mean by that. So let's look at an entry and an exit. So like I showed you before, you look at the you get the alerts from the bot on the Discord. Boom. It tells you the MACD is crossing up, right? And you can even get in a little early when you see it start to curl up before it crosses. The cross is the added confirmation, but you see the RSI is down here. You go and check the RSI. You got the alert from the bot. Boom. RSI is low and the MACD is crossing up. Okay, boom. I get into a call. So I get into a call somewhere around here. I ride the wave up, ride the wave up, ride the wave up. It starts to come down. Do I get out of it yet? Maybe not. Right? I'm holding. I'm still in the green because I got in about right here. Still in the green. So then, cool. I will put a stop loss basically on under it. I will put a stop loss under whatever price I got it on. First of all, always have risk management. Now, I get in here. My RSI is low, very, very low. My MACD crossed up. That's my entry. Now, remember, I have to exit based on the same principle. I'm waiting for the MACD to cross back down and the RSI to be high. This is a sign that this thing is coming down. So then I got in on it low and on the cross up. Boom, ride the wave, ride the wave. I'm still in it. I'm still in it. It's going up. Okay, this is great. This is great. This is great. And then I get a signal. Boom, the MACD crossed down. And I see the RSI is near 70. Not 70, but near it. At this point, if I hold on to this, I'm just gambling. So what I would do is I would either exit or put a stop loss very tight. So then no matter what happened, oh, look, it kept going. It kept going. Boom, it crashes. Right? You got out and you traded with the chart and not with your heart, family. So that's how we rocking out with that. That's how you do the MACD and the RSI. So then on Webull, you want to see my settings? It's like this. You go to indicators on Webull up here. And then what you're going to see is this. My fast is called 12. My slow is called 26. My signal line is 9. So that's pretty much it. You could replay this, rewatch it, everything like that. And then my RSI. So the other one was the MACD. This one's the RSI. It's on 6, 14, and 24. These are the defaults. Except I will say this though. On my RSI, actually my MACD, I switched the colors. My MACD, I changed the color to blue. And I changed my signal line to orange. How did I do that? I click style and then I just changed the color. That's it. So then that's what we have for you today, family. Again, I want you to use the Moomoo app so you can get on that level 2 trading with us and see the order book. I love y'all. I appreciate y'all. Just know, MACD RSI class is now in the history books, family. Again, I see you in the Discord. I love y'all. Take care.